The numbers on the screen are flashing right now, and if you are looking at the ticker symbol BYND for Beyond Meat, you are seeing a live price hovering right around $1.25. We are seeing some early morning turbulence in the market today, with the stock oscillating between a low of $1.15 and a high of $1.27 in these opening moments of the trading session. It is volatile, it is choppy, and it is exactly the kind of price action that makes you question everything you thought you knew about where this company is headed. You might have expected this stock to be quietly fading into the background given the headlines lately, but the reality is that Beyond Meat has turned into a volatile battleground that defies simple logic. The expectation from the mainstream financial press is that this is a company on its last legs, gasping for air amidst falling revenues and a consumer base that has moved on. But the reality? The reality is that we are watching a fascinating tug-of-war between aggressive short sellers and a stubborn retail base that refuses to capitulate, creating a friction point that is sparking these massive intraday swings we are seeing right now. When you look at a chart like this, seeing a stock trade at what is effectively penny stock levels compared to its all-time highs, the natural reaction is to look away or assume the story is over. But I want you to look closer, because what is happening here is not just about veggie burgers anymore. It is about market mechanics, liquidity crunches, and the psychology of a distressed asset. Just recently, we saw this stock stage a massive rally, jumping significantly in a matter of days, only to pull back. That wasn't driven by a sudden global surge in demand for plant-based sausage. That was a classic pressure cooker situation where the short interest, the number of people betting against the stock, got so crowded that any bit of buying pressure forced a violent squeeze. It is the same mechanic that we have seen play out with things like Tesla stock in its early volatile days, or even occasionally with Nvidia stock when the momentum shifts, although obviously the fundamentals there are entirely different. Here, with Beyond Meat, we are dealing with a company that is fighting for its very survival, and that desperation is what makes the stock so incredibly twitchy right now. Let's talk about the elephant in the room, or perhaps the lack of one since we're talking plant-based alternatives. The recent headlines have been dominated not by product launches, but by legal investigations and financial restructuring. You have law firms circling the company, announcing investigations into potential securities fraud, specifically regarding how the company handled its asset valuations and disclosures. When you see news about impairment charges and class action investigations, it usually sends the average investor running for the hills. The expectation is that this legal pressure will crush the stock instantly. However, the reality we are seeing on the tape today is a weird kind of resilience. It's almost as if the market has already priced in the absolute worst-case scenario. When a stock is trading near $1, the fear of it going to zero is balanced against the lottery ticket potential of it going to $3 or $4 on a buyout rumor or a restructuring miracle. This asymmetry is what attracts a certain type of capital, high risk, high reward. It's the kind of environment where you might see activity on platforms like Robinhood stock trading apps or discussion boards where traders are looking for that one spark to ignite a momentum run, regardless of the underlying business health. The volume we are seeing today is telling a story of indecision. It's not the capitulation volume where everyone is selling at once. It's a scrappy back-and-forth exchange of shares. You have institutional algorithms likely trimming positions or hedging, and then you have individual traders stepping in, perhaps using Fidelity Investments accounts or their SoFi active investing platforms, trying to catch a bottom. It's dangerous, frankly. It's the kind of trading that requires nerves of steel because the fundamental floor is shaky. We just came off a third-quarter earnings report that was, to put it mildly, difficult to digest. Revenue was down over 13%. That's a double-digit decline in a growth industry. The company posted a net loss of over $100 million for the quarter. To give you some context, that loss includes non-cash impairment charges, which is accounting speak for admitting that certain assets, factories, equipment, inventory, are not worth what they thought they were. They had to write down the value of these assets, which hits the bottom line hard. The expectation was that the company would have stabilized by now, that the cash burn would have stopped. The reality is that they are still burning through capital, and that creates a ticking clock. This brings us to the broader context of how you might be managing your own portfolio. If you're using something like Schwab Intelligent Portfolios or looking for general investment help, you're probably being told to stay away from distressed small caps like this. And that's generally sound advice for long-term wealth preservation. But for those who self-invest or use investing sites to actively trade, Beyond Meat represents a unique puzzle. It's a sector play that went wrong. The plant-based meat sector was supposed to be the future of food. It was supposed to be up there with electric vehicles in terms of shifting global consumption habits. But inflation hit, and when grocery bills skyrocketed, consumers started trading down. They stopped buying premium-priced plant-based patties and went back to traditional proteins or cheaper alternatives. This macroeconomic shift crushed the premium valuation that Beyond Meat enjoyed. Now we are left with a brand that is well known, everyone knows the name, but a business model that is struggling to make the math work. I want to pause here and ask you a question because I'm genuinely curious about the sentiment out there. Comment below how many shares of Beyond Meat you currently hold, or if you sold out a long time ago. Are you holding because you believe in the mission, or are you just waiting for a price spike to exit? I read every comment, and it really helps to gauge where the real heads are at versus what the analysts are saying. Speaking of analysts, the coverage on this stock has turned incredibly bearish, which again sometimes acts as a contrarian signal. When everyone from the big banks to the niche firms has a sell rating, the bar for positive news becomes incredibly low. If the company comes out and says, "Hey, we only lost 50 million this quarter instead of 100 million, the stock could theoretically pop 20%. Because it beat the catastrophic expectations. This is the game being played right now. It's not about, is this a great business anymore? It's about, is it less terrible than the market thinks? This is where platforms like interactive brokers' trading terminals light up with options activity. Traders aren't buying the stock because they want to own it for 10 years. They're buying call options betting on a short-term volatility spike. They're using the leverage available on an interactive broker's account to play the swings, not the fundamentals. Let's look deeper into the business operations because that's where the rubber meets the road. Beyond Meat has been trying to pivot. They recently launched the BYND platform, their fourth-generation product, which uses avocado oil and is designed to be healthier with less saturated fat. The criticism of the earlier products was that while they were plant-based, they were highly processed and not necessarily healthy in the traditional sense. So the company listened and reformulated. The expectation was that this new healthier burger would bring the health-conscious crowd back. The reality, however, has been lukewarm. The taste is different, the texture is different, and changing a flagship product is always a massive risk. Just ask Coca-Cola about New Coke. While the nutritional profile is better, the consumer habit had already been broken by the high prices and the inflation squeeze we discussed earlier. Furthermore, their international expansion has hit roadblocks. The European market is generally more receptive to plant-based diets, but even there, competition is fierce. In China, which was supposed to be a massive growth engine, the company has had to scale back significantly, realizing that the adoption curve there is much slower and more difficult than anticipated. This retreat from China was part of those asset write-downs we mentioned. It is crucial to understand the balance sheet risk here. When you invest online or look at your Fidelity mobile app, you usually check the price, maybe the PE ratio, but for a company like this, you need to look at the debt. Beyond Meat has convertible notes coming due in the next few years. Convertible notes are a type of debt that can turn into stock, but only if the stock price is high enough. With the stock trading at $1.25, those debt holders are not going to convert to equity. They want their cash back. If the company doesn't have the cash, that's when you start hearing the word restructuring or bankruptcy being whispered. The company has been working on this, engaging with bondholders to extend maturities and reduce the immediate pressure, which is a positive sign. It shows they are fighting to stay alive. But it also means the equity, the shares you and I can buy on Robinhood crypto or Robinhood cash management accounts, is at the bottom of the pile. In a restructuring scenario, equity holders often get diluted or wiped out. This is the sword of Damocles hanging over the stock price and keeping it suppressed. But let's play devil's advocate for a moment. What is the bull case? Why is the stock not at zero? The bull case relies on two things: survival and acquisition. The survival argument is that the company cuts costs so aggressively that it becomes a niche, profitable business. They stop trying to be a massive global conglomerate